All right, welcome everybody to today's all-weather strategy discussion. My name is Andrew Stotz, as you can see, and hopefully you're having a nice Monday. I got a bunch of questions from Kun Supakon, who is normally on. He said he can't be on, but he gave a bunch of questions. So I've written out some answers and I put them into the chat. You can see those questions, and I just want to recommend that if you've got any questions, now's a good time to ask and just type it in the chat. It's my pleasure to answer those questions and answer any of your questions. Today, we're going to be talking about the January performance of the all-weather strategies, what's going on and, what's coming next. Let's take a moment before we get started to welcome everybody. I'm going to pour myself a glass of water. I like to drink a lot of water. And I'm going to have an espresso in just a minute. But before I do, just want to welcome everybody. We've got people arriving right now. Welcome. And if you've been here before, you know how it goes. Make sure you ask questions, say hi, share what you're doing. What are you drinking? Are you drinking tea? Are you drinking water? Are you drinking coffee? And then share any questions that you may have, just like Supercorn did. And meanwhile, I'm going to have an espresso myself right now. Here it is. So what are you drinking? That's wonderful. I'm standing up at my home office. In fact, you can see there I am on the side. That's my other camera. And I just want to welcome everybody on. I'm going to start to talk about the all-weather strategies in just a moment. And can see I have tons of books all in my office. Maybe you are a book lover like me. All right, let's get into it. And again, feel free to ask any questions in the chat. So here we go. All right, so first, let's talk about the all-weather strategy a bit, where we're at. So remember, ask questions in the chat. I'd love to get your questions and answer them. Remember that our strategies are global, right? We're investing globally, not only in Thailand. They're long-term. There's gains from long-term equity return while trying to reduce the damage during equity market downturns. One of the questions that I just got from Supercorn was, I feel like the U.S. stock market is ready to crash. And what do you think? And I think that the top biggest companies in America are at such a high valuation that it's hard to see that they're going to produce fantastic returns over the next 5 years. So they definitely are pumped up. But I also keep in mind that the mid-cap stocks and smaller stocks in America are very, very cheap. So we could see the large ones come down, bringing everything down. But eventually, the small and mid-sized ones, hopefully, will start to make a comeback. But ultimately, what I try to share is that equity is where we want to have our exposure. Our strategies are diversified globally across asset classes, regions, sectors, and companies. Remember why we're here: to build wealth over the long term. There's 6 pillars of investing that I see. First, invest in stocks, right? Over time, stocks have generally outperformed bonds and gold, offering a share in the value created by that company's management. Number 2, reduce risk. Diversify your portfolio across companies, sectors, countries, and asset classes to minimize overexposure to any area. Number 3, contribute regularly. Reduce stress with dollar cost averaging, investing a fixed amount regularly can leverage market volatility, lower cost, and boost long-term gains. And number 4, stay invested. Think long-term. Be patient. The benefit of compounding happens over decades. And number 5, maintain discipline. Is that you in the morning doing your planks? Monday mornings are tough for me because I go to the gym in the morning and then I go to the park and then I do my yoga. Follow your investment plan to avoid acting based on emotions. Number 6, continue learning. Enhance your investing skills by staying informed and learning from successes and failures. So remember that we create our strategies for many decades, but even a decade is not really long term. That was me when I was young. That was me when I came to Thailand 3 decades ago. And that's me when I'm 100. So our aim is to create strategies that perform over many, many decades. Remember that I've outlined most of this in my book called How to Start Building Your Wealth Investing in the Stock Market. And the other day, one of my students took a picture of this book in Thai language and sent it to me. And that was super cool. Also, I have an online course at academy.astotz.com about building your wealth in both Thai and English. Now, our target is to deliver steady returns over the long run. You can see our 3 strategies here. AWS, the red line, was launched in February of 2019, and we target 6% per annum. AWAF launched in October of 2021, and we target 8% per annum. And then AWIG, Inflation Guard, was launched in July of 2022, and we're targeting 4% per annum. Now, from when we started All-Weather Inflation Guard in July of 2022, the strategies are performing almost as expected. Recent rankings show moderate risk AWS slightly outperforming the higher risk AWAF, while low volatility Inflation Guard delivered the lowest return. And since that July of 2022, all strategies have had lower volatility than world equity. Now you can see the world equity line, the brown dotted line, has gone above. And we mix in asset classes to reduce equity drawdowns. But the problem is this limits gains during boom times. So if somebody said, if I just put my money in the market, I'm going to get the return that's on that brown dotted line, you're right. But you're also going to get the volatility and the risk of that. So we're trying to reduce that volatility and risk and yet still capture some of that upside. Now, before I go on, I'm going to flip back here and just ask you to make sure that you share any questions that you may have. We got a lot of questions from Supergone, which I put into the chat. But if you have any questions, feel free to ask. So much going on around the world with Trump coming in and moving super, super aggressively. And, that's going to have a massive impact around the world. So feel free to ask any questions that you have as we go on. I just want to welcome everybody, and hopefully you've got a glass of water, coffee, tea, and you're ready to relax. Somebody may wonder, why do I have a beard? Yeah, I normally don't have a beard, but I grew one since Christmas time because I'm launching my profit boot camp in March. And I decided that I was going to wear my beard until we get our customers into the profit boot camp, where we help mid-sized family businesses double profits in 12 months. And so I decided I'm going to wear my beard until we launch that. All right, let's continue on with talking about, so it's no questions, but I like your beard. Yes, thank you. So here we can see all-weather strategy gained 1.4, all-weather alpha focus gained 3.9. It was a great one. And all-weather inflation guard gained 1.6. So let's look at all-weather strategy. We're 65% in equity, 25% in gold, and 5% in bonds and commodities. The main equity, of course, is the U.S. at 25% and China at 25%. In a way, we're really playing 2 very opposite stories right here. And it'll be interesting to see how it plays out. Our performance has been hit by a weakening China, but I still think there's opportunity there. And also you can see 25% in gold has been very good for us. So since inception, the strategy was up 48.9. You can say 49%. We're almost up 50%. That's exciting. Remember that this is after fees, as best as we can calculate those fees. And here we can see the 60-40 portfolio up about 129.8. That means that we're up about 19% above the 60-40 portfolio, again, after fees. Now, in January, the strategy was up 1.4, which was 0.3% below the 60-40. So what happened? Well, our 25% allocation to gold did great. And our 25% to the U.S. was a drag. Nothing special with that. And our 25 allocation to China hurt us. It was down 4.2 in January. Of course, developed Europe is starting to move, and that's part of the reason why Supercon was asking about that. We've been out of Europe for a while now, but we'll see in the next rebalance. The strategy has added 19.1% value compared to the 60-40 portfolio since inception. So this gives you a picture on an annual basis. In 2024, after fees, we were up 11.3 versus the 60-40 benchmark. So that was a great year, 2024. And now let's talk about all-weather Alpha Focus, which gained 3.9. So here you can see we're 95% in equities, 3% in bonds, and 2% in gold. I wish we had more gold. That would have been great. So the strategy was up about 5% since inception. Remember that we started it and the market started falling. And so we had a tough performance in the first year or so. And here we can see that's 7.4% above a 60-40 portfolio. So still outperformance after fees. But it's 3.2% below world equity with a lot less volatility. So in other words, you would have been up 5% if you invested through Alpha Focus and 8% if you invested only in equity. But the result of that would have been you also would have had a much, much more volatility. So here we can see the strategy was up 3.9%, which was 2.2% above the 60-40. And our weighting in precious metal miners and healthcare helped us, right? And of course, Asia Pacific ex-Japan underperformed. Let's go back and look at our precious metal miners here for a second. You can see we were 22% exposed to the precious metal miners. And so that was particularly good for us. And the strategies added since, cumulative value compared to the 60-40 portfolio since inception. The year 2024, we outperformed. 2023 was a rough year, but we went down less in 2022, which made me feel better. The strategy beat a 60-40 portfolio by 3.5% in 2024. All right, let's talk about all-weather inflation guard, up 1.6%. So here we can see that we're 30% in equity, 60% in bonds, and 10% in gold. And that equity mainly, as we can see, is the world equity. So we have a global exposure there. Global bonds, we have about a 45% weighting, which is a pretty big number. Since inception, the strategy was up 8.9%, and that's about 8% above a 40% equity, 60% bond portfolio. And of course, the strategy has also experienced less volatility. So here we can see all-weather inflation guard was up 1.6, which was 0.5% above the 40-60. Our 10% allocations to gold and 5% to financials did great. Our 5% allocation to infotech did okay. And money market and global bonds were up slightly, while tips were slightly down. And here you can see the strategy has added about 7.3% value compared to a 40-60 portfolio. again, after fees as best that we can calculate them. And the strategy beat a 40-60 portfolio by 1% in 2024. Before I go on and talk about Trump's first few weeks, I'm just going to see if we've got any questions. Feel free to ask any questions if you've got any. So the first one says, Ngun Dem Ong. So the question is, no questions, but I like your beard and mustache. Thank you. Yeah, some people don't like it, but I look like a sophisticated professor, I think, with it. So we'll keep it. Shojiko says, what's your long-term outlook for Chinese tech sector, particularly Hang Seng Tech Index? It's the hardest part from my perspective is trying to predict what the U.S. government is going to try to do to China. I would say that between the State Department and the CIA and the military behind the president, that they are happy to really go to war with China. And I think that Trump is probably going to slow that down, but still going to put pressure on China. They're going to try to limit the use of Chinese tech. We're seeing it with TikTok as an example, and, try to hold back China. But, I don't think that it's going to be, I don't think that Trump is going to do that as aggressively as Biden was doing. And so I think we're going to be back to a little bit more free market. And that's the reason why I would say Chinese tech sector, under Trump should do better than under Biden. All right. Feel free to ask any questions. I'm going to go back into the presentation and let's see what we've got out there. So Trump has done a lot to make headlines. So let's narrow it down a bit. Is it America first or is it Trump first, right? The new space race, which is AI, and tariffs are a negotiation tool, which are unconventional methods to create uncertainty. And gold does well in times of uncertainty. So let's talk about Trump. Here's one critique that says, before the inaugurations, 2 meme coins were launched and reached billions in market cap. So what did Jesse Livermore say, which is not his real name, of course? And he said, Trump and Melania are bearish for Bitcoin because they reveal the scam inherent in all cryptocurrencies. You invent a new form of money and you get to start out with 100% of it, or rather, as an early adopter, you get the privilege of mining it at a much lower cost than everyone else will eventually have to pay to mint it. So this is an example of how Trump could end up with him and his cronies taking advantage. So this is one of the questions, of course, that the Democrats are going to bring up against Trump for sure. Let's talk about the new space race, which is AI. Trump signed an executive order to make U.S. the leader in AI. So this basically said removing barriers to American leadership in AI. And David Sachs is the head of this and trying to push the AI movement in America. I think that America's already got a very strong, position. It's just that in the beginning, maybe they're using expensive methodologies that are getting cheaper as we learn about DeepSeek and the like. So there's also been an announcement around Stargate, which is a $500 billion AI initiative by leading U.S. tech firms and SoftBank from Japan and others. It's come into question how much will actually be invested, but it shows the focus on AI. Trump wants to win. He wants America to win. And so I suspect he'll put a lot of energy into that. So China ranks second to the U.S. in overall AI development. We can see the cumulative share of granted AI patents is about 61%. China AI patents has led, and although you could say there's a lot of pressure for quantity, there's still a lot of quality. And it shows that the Chinese government is focused. The 2 largest economies in the world, are in an AI race. I just wanted to go back and share some experience here for a second. I did my PhD in China, and it was clear that the Chinese government put a lot of pressure on the young students to create unique and excellent research and get it published in big journals. So there's definitely a lot of pressure on the young people, and I saw that a lot, and they're excited to do it. All right, we've got a question here. Hold on. Surya says, according to gold all-time high and higher, what is your perspective in gold investment for your portfolio? Well, right now for AWS, we're 25% gold. We've been enjoying this run. How much longer it will go? I think it's really a question of whether Trump and Musk and the like are able to show a significant cut in government spending. Ultimately, I don't trust politicians in Thailand, in the US, or anywhere else. And they say they're going to reduce the debt and the deficit and the spending, but they don't. Thailand is interesting because Thailand has its law related to the amount of debt that it can have as a percent of GDP. That is such a great idea because it prevents the politicians from basically bringing on too much debt. But America doesn't have that type of restriction. Pony Taro says, Trump is quite hard to understand. I'm not sure if those policies are for Republicans, for America, or for his own profits. His insanities, revenges, or just a red herring. Yeah, and that's part of what makes him unpredictable. I don't think that it's the Republicans. Let's just go through your list. Is it for Republicans? No, the Republican Party never really wanted Trump. And when Trump came in 2016, there was a huge amount of resistance. I would say Trump has taken over the Republican Party and brought his policies to it. But Trump is, one of the reasons why I don't believe that Trump will stop spending is because, and reduce government spending is because he's a big spender. He's almost like a Democrat when it comes to spending your money. For his profits, possibly. His insanity, revenges. Yeah, there's a lot of revenge for sure going on. So gives you some of my thoughts. Let's go back to the presentation, and I'm going to share my screen again. So Chinese AI DeepSeek shocked markets with his efficiency. And the point is, it's actually, I was just having a meeting earlier to talk about how AI is all theft. They're stealing information to train the AI models. It's not like they're going out and paying for every book that they scan into the model. They're not paying for almost anything. Of course, they're paying for the price of processing power for sure. So also there's skepticism about, how cheap it was to build. But I do remember a story I thought about in relation to this. I want to tell you a story about Bumrungrad Hospital. And in between jobs, before I took the job as head of research at CLSA many years ago, I was asked by Bumrungrad Hospital leader, Linda, to come in and help advise the hospital on selling the software he had developed to Microsoft. And the guy that I had met was a guy named Pat, who created the software. What was interesting about Pat was that, and the hospital situation, it was after the 1997 crisis, and basically Bumrungrad had no money. Remember, Bumrungrad had delisted from the stock market after the 1997 crisis. And so they basically had no money to buy, fancy computers. So he had to write the code that could be run on the lowest price computers. And that meant he had to be much more efficient in the writing of the code. And I remember when we sent that code to Microsoft to send to their third-party evaluator, the third party came back and said that was the cleanest code that we've ever seen submitted in a Microsoft transaction. In 2008, we sold the software to Microsoft, and it was a big gain for Bumrungrad in that particular year. But the point I'm making is sometimes when your back's to the wall and you don't have money and resources, you have to come up with new and different ways of doing things. And that's where I think what we're seeing with DeepSeek, as an example, the Chinese are going to be forced to have to come up with better ways. All right, next question. John Penn says, could I invest more in AWS at this time, or should I wait? I can't remember exactly when our next rebalance is going to be, but I think it will be January, February, March. maybe first week of March. So I would say that we're about halfway through February. Maybe it's better to wait until the first week of March when we make our next rebalancing. Otherwise, you could potentially buy something right now and then you have to come out of it. So that would be my point is, you want to invest as soon after we rebalance the portfolio. All right, next question. I'd like to ask about investing in AWS. If I would like to increase the investment, should I do DCA or just invest more when you adjust the portfolio? Which one is recommended? Probably, one of the things that I always say is number one, don't try to time the market. That's what I'm doing, right? I'm allocating between stocks and bonds and commodities and gold to try to catch the cycle. So the first thing I want to mention to everybody is if you're saying, oh, I don't like the equity markets right now, therefore I'm not going to allocate to AWS. Now you are doing some allocation decisions just like I am. Because remember, I don't have to own equity. I can own stocks, I can own bonds, I can own commodities, and I can own gold. So if you are doing the allocation decision and then I'm doing the allocation decision, now we're going to have a problem because it's going to be hard to outperform. So from just going back to the basics, I would set a regular amount every single month and contribute that rather than trying to time the market. But that doesn't perfectly answer your question. I think your question is, should I just wait until the 3 months is up and then add my money in at that point? I would say, yeah. So in other words, Kay, in this case, let's say instead of doing dollar cost averaging every single month, just wait until we have our rebalance, let's say in the first week of March. And then I would do your contribution. In a sense, it's still dollar cost average. It's just that we're setting it on a quarterly rather than a monthly basis. I think this is an excellent question. And that would be my recommendation is think of it like I'm doing dollar cost averaging on a quarterly rather than a monthly basis. And if you got that, I think that would be, the way to look at it. That was an excellent question, by the way, Kay, and hopefully it was helpful for others. Feel free to ask any questions if you've got. I know we got more than 200 people on, and the questions have been coming in slowly today. Maybe people are tired. I've been working all weekend, both Saturday and Sunday, every single weekend these days to launch my Profit Bootcamp. And so I'm a little slow today. It's Monday. All right, let's go back into the presentation. And basically what Trump is saying is that Trump is going to make sure that America wins this AI race. He made PayPal Mafia member and AI and crypto czar of the U.S. This is David Sachs, and he is going to push AI and crypto very hard. And that's exciting. It's exciting to pick somebody like David Sachs who really has a passion and a lot of knowledge. And he's confident the U.S. can't be complacent when it comes to AI. So the AI czar, Sachs, also says large data centers are still essential to win the AI race. What better place to put data centers than in a very, very cold piece of land like Greenland, as an example. Now, U.S. construction spending on data centers has accelerated massively in recent years. And you can see the annualized private construction spending is now up to about $32 billion. And global energy consumption is constantly growing. It just doesn't stop. It's relentless. And AI might accelerate this energy consumption. So AI is here for good. You're probably using it in your daily life. I know I am. Remember that Google search, though, uses about 0.3 to 1 watt per hour per query for retrieving and ranking results. ChatGPT uses about 10 to 100 due to the resource-heavy neural network computations. So that makes your ChatGPT search 10 to 100 times more energy intensive than Google because it generates new text instead of retrieving existing information. it is energy hungry, which basically means more money into energy. Data centers consume 22% of electricity in Ireland compared to less than 5% less than 10 years ago. That's an incredible statistic. The amount of energy consumption is just rocketing up. This is in line with data centers' global share of final energy consumption of around 20% in 2023. So my prediction is that demand over the next decade will far exceed even the biggest forecasts. So here we can see IEA, the International Energy Agency, says consumption should rise, have a rise of 5,900 to 7,000 terawatts per hour by 2030, equal to US and EU combined. It's an incredible increase. And they also say data centers to use 1,000 terawatts per hour by 2026, thanks to AI and crypto. And they predict global demand to double by 2050, consumption up to 71,000 terawatt hours by 2050, and non-OECD use to double by 2050. The demand for energy is incredible. Fossil fuels are still dominating. We can see here that the majority is the blue, coal, and the green, oil and gas. And if we look at renewables, it's grown in size, but it's still a very small amount. So thank you, Europe, for teaching the world that you can't go green quickly. Over a decade, natural gas, coal, nuclear, and oil production combined fell by 1.6 million gigawatt hours. Renewables rose by only 0.7. So renewable energy cannot compensate for the phase out of coal and nuclear. And Germany and Europe in particular, but Germany in particular, helps us understand that. And this is a good message for Thai government that is pushing the utility companies to do all of this renewable energy. This is a lesson that, it's not as rosy as what you think. Now, China is pushing hard, but China operates 55 nuclear reactors and is building 24 more. That's adding about 25 gigawatts, or about 5% of China's power generation. That's a huge number. And it plans to boost the nuclear capacity to 120 to 150 gigawatts by 2030. And nuclear power is key to China's 2060 carbon neutrality goal. Now, let's talk about tariffs. They are a negotiation tool, and it's an unconventional method to create uncertainty. Here we can see Canada, Mexico, and China account for greater than 40% of U.S. imports. So imposing tariffs on imports from these three nations could reduce U.S. GDP. Yet, on February 2nd, Trump imposed 25% tariffs on imports from these countries. And that raised the tariffs on China by 10% in particular. Now, he says he's doing it to reduce the inflow of fentanyl and illegal immigrants. He does not say he does it to harm trade or protect U.S. companies. Now, one day later, the Mexican president agreed to send 10,000 soldiers to the U.S.-Mexican border. Trump got what he wanted, and tariffs were paused. Tariffs are interesting. I think it's going to be hard to raise that much money through tariffs. And you can also say he's looking forward to achieve a deal, which further highlights Trump's interest in making deals and making them quick. 2 days later, of course, the Canadian Prime Minister announced a plan to stop fentanyl from Canada coming to the U.S. Here we can see some of what he says. And Trump got what he wants again, and tariffs were paused. In just 2 days, it appears Trump achieved what he wanted with Mexico and Canada. Now, before I go on, let's just talk about that for a second, because I think it's interesting. Trump is a master negotiator. And you can say that Trump knows the power of the U.S. If the U.S. really wants to demand something, other countries are going to have to follow along. And so he's using that power. And, you can argue that that's bad, but I would also argue that if the U.S. doesn't use some of its power, then how are they going to get better deals for themselves? All right, let's look at some other questions. Okay. Champion. Quarterly DCA sounds good for me. Yeah. Actually, it's not a bad idea because it can reduce your cost, because the transaction costs that you have sometimes, particularly when you're doing like stocks and overseas stocks in Thailand, can be very high. So, and another question, is it true that Warren Buffett holds so much cash right now, and why? Thank you. That's Salaya DC. Well, as of September of 2024, he had $325 billion in cash. That's about 30% of his total assets. It's a huge number. And the main reason why Buffett tends to build up cash is because he's looking for how to deploy that cash when prices collapse. The guy is gotten a lot older. He knows his legacy is there. This could be, if we have another collapse in the markets, this would be his last chance to buy things at super low prices. And so that's where I think he thinks the market is overpriced, and therefore he's raising money by selling stocks. And the result is he has a lot of cash. Kay says, may you please share your opinions about Thailand stock? Kay, I feel sad for Thailand. It's really difficult for Thailand right now. And I don't know exactly how Thailand is going to come out of this. You know, if we go back to when I moved to Thailand in 1992, Thailand had a lot of competitive advantages in its workforce, in keeping its costs down and all that. We didn't have that many global brands, but we had that cost competitiveness. But then China came along, and now China is basically extremely cost competitive. And part of what I'm trying to do in my Profit Bootcamp is help mid-sized family businesses figure out, how are we going to deal with this situation of China being such a low-cost, high-quality option for many of our products? And I think that this is causing Thai companies to either crash or wake up and think about, how do they add more value? And really, ultimately, Thailand's got to move up the value curve to some extent, because it can no longer compete with China in the low cost end. So if you own a business, you need to be taking action now to think about, how do we reposition this business? So with that said, my outlook for Thailand is not that positive, but that doesn't mean that the Thai stock market couldn't fly. I haven't looked at the Thai stock market recently, but I suspect at some point it will have been sold down to the point where it's worth getting back into. But as of right now, I'm not convinced that time is now. What do you think about S&P 500 this year? Bullish or bearish? Should continue to do DCA? This is from Gan Wijan Precha. Gan, I just want to say the key thing about DCA is never stop. That's the whole point of DCA. Never stop. Even if you expect, oh no, I think the stock market's going to crash, never stop, because you could be wrong. You could be wrong by many, many years. And so with DCA, you just keep going. When the market is cheap, you're buying. When the market's expensive, you're buying. So to answer the second part of your question, always continue DCA. Now you could switch to quarterly DCA like we talked about, or you could make some adjustment. Like if you think the stock market's really expensive, you may decide that you'll allocate a little bit less. And then when the stock market gets cheap and you think it is, then you can add a little bit more. But that requires that you've got to figure out, is the market cheap or expensive? That's hard even for a professional. What do you think about S&P 500 this year, bullish or bearish? My feeling is that the S&P 500 will probably end the year down. And that's because we just had so much movement, you know, in the most valuable 7 to 10 companies. And I think that can't go on forever. Multiples are high. And so I would say I'm neutral to negative on S&P 500, but you have to be careful about your portfolio. You never want to bring, you know, a big country like the America down to 5 or 0%. I always keep some weighting in it. Right now I've got 25% weighting in it. All right, next question. Life is short. Yeah, that's true. Tell that to my mother, who's now 86, and she's out at in the living room, walking around, getting her exercise. Regarding the energy consumption data you have shown, what is your take on oil price? Well, I think that oil price, first of all, I would say demand for oil is just going to rise and rise and rise. But I would say that one of the things that happened was when the ESG movement came from the Democrats mainly, what was happening is they were trying to stop the energy companies from getting cash and making investments in energy or oil exploration and oil production and refining. And so the result of that is that basically there was a lot less capex or a lot less money that went to the oil companies. And so they didn't spend that much. So I do think that we've got a spending activity that's got to happen on capex over the next 5 years. And it could be that that brings on new supply into the market and brings down the oil price. But do I think demand is going to fall? No, I think demand is going to continue to rise. All right, next question. V. Thailand has been trying to get U.S. tech giants to set up data centers in Thailand. Would a Google or Microsoft data center contribute to the Thai economy? Yeah, I don't know. I'm not that convinced that data centers are going to be the future, driver. There's almost nothing for Thailand in it except, renting out that space and, having the name of those companies be there. But I don't think that it's going to cause a major contribution. It will cause some contribution to Thailand, but I don't think it's major. So I wouldn't. Now, do I think that investing in data centers is interesting? Definitely. But I don't think we have anything on the Thai stock market right now that's investing in data centers. Rapunzel says, hello. Well, hello there. Why gold and crypto matter in the 21st century? That's kind of an interesting question. I would say that gold matters because politicians just always print money and spend. And so gold is our place to hide out with our money. For crypto, I think that crypto came along when people thought there's no way to control the US government. They're just going to constantly print money. And therefore, crypto is an interesting alternative. So from a money perspective, crypto was interesting. But crypto is not that interesting for a country like Thailand, as an example, because Thailand can't print that much money and debase its currency, or else the currency is going to go down and devalue. Whereas America can print a lot of money and still the currency doesn't collapse as much as you would think. All right, let's see. I'm thinking how to manage my LTF portfolio now. Yeah, that's an interesting one. I hope one day to have some all-weather opportunity in RMF, LTF, and those areas. But for right now, we don't have it for all-weather strategy. Bosch says, your sounds so sad when you talk about Thailand market. It's trouble. I mean, I've been in Thailand since 1992, and I would say it's really, really tough now for Thailand. And I don't think that the businesses are ready for it. And it requires very, very serious action. I spoke at the Institute of Directors a couple of years ago to give a presentation to listed companies. And we looked at the market and I said, it looks terrible. And they were all like, yeah, it's terrible. And I said, but it's you, right? Thai companies, Thai management is what makes up the stock market of Thailand. Thai companies, and particularly Thai management, need to get more aggressive at bringing down costs, trying to respond to China, and in particular, start to build up brand and the like. So yes, I feel sad because I live here and have lived here longer than I lived in America. All right. ABB says your allocation to China is great. Yep, we're working on it. We hope that allocation really performs, and let's say as well as our allocation in the past to commodities or our allocation in the past to Japan worked well. Okay. Rapunzel says, thank you. Yep, you're welcome. What's your view on US dollar versus gold? Thanks. I mean, I think that if Trump and his team can seriously lower government spending, that's going to cause the dollar to continue to rise. I think that's also going to eventually cause the gold to no longer rise, to maybe stay where it is or fall, because eventually people will have more confidence in the U.S. and the U.S. currency, and that the government won't debase its currency. So that's kind of my opinion at this point. But I would say still strong US dollar and still strong gold. But let's watch. I think that if they can really show a serious cut in spending, it's going to be major. One Priya says, is USAI stock becoming a bubble? Yeah, I mean, in the sense that they're not making much money, or maybe they're not making any money, or maybe they're making a lot of loss. I definitely see there's a bubble risk there with USAI. But the thing is that why does it matter? They're not AI companies are not that many listed in the US stock market. So it's not like we can invest that easily in OpenAI as an example, and we're getting all the benefit from it. The risk really is that if those companies crash, AI could crash. And if AI crashes, America could lose its advantage. And there's a lot there. But yes, the reason why AI is in a bubble compared to tech companies is because tech companies are super profitable, but AI is not. What do you think about DCA and Bitcoin? I think DCA is a structured way to invest in anything. So it doesn't matter whether it's Bitcoin or whether it's, equity. It's a structured way of investing. Now, with Bitcoin, you could argue that, you may want to allocate some when the price goes down, down, down. But, I would say I would just DCA. If you believe in Bitcoin, I would just do DCA and get back to work to make more money, to put into Bitcoin. Go China. Yeah. Okay, let's look at another one. Surya says, for me, it's hard to find new growth drivers for Thailand as for now. I think you're right. And part of the reason, Surya, that I started the Profit Boot Camp and I'm launching it now is because I want to help Thai companies that must figure out how to increase their profits. So for everybody out there, you need to take it very seriously and make sure that you are focusing on the profits of your business. It's interesting, how lost companies have gotten. There's all kinds of things that can distract you from profit. One thing is all the apps on our phone, and our management teams are on the phones all the time, and our employees. Lots of distraction, lower profit. Also, we got distractions like ESG and all of the intense scrutiny that's coming in on companies through the SET, through the SEC, and through CFA Institute and others, governments that are pushing pressure on the companies. Those pressures can crush and destroy your business. So you really need to focus. And I'm afraid that many Thai companies are kind of lost at this point. So I would say, yeah, I have a hard time finding the growth drivers. I guess one growth driver is if a company told me that they're not doing ESG, I would be interested in looking at that company and doing research on that company. That would be interesting to me. All right. Jet says, do you consider to create plan that have 10% return since S&P 500 at 8 to 10 for long-term 30-year DCA? It's better to invest in S&P compared to 6% plan. Yeah, I mean, I try to create a global portfolio and a global strategy. So Jet, I don't have that, but I do think, Jet, that I will, in this year, I'm planning on launching a series of mutual funds. And one of them, I think, will be a U.S. Mutual fund, a fund in Thailand, investing in the U.S. market. And I'm going to target, the highest return I can get out of that. So, yes, I'm considering a plan that will capture more of the U.S. return. Chakri says, are technology stocks, aka NASDAQ, in a bubble? No. Tech stocks are not in a bubble. And the reason why is because they're making huge profits. Are tech stocks expensive? Yes. They're very expensive, but they're not in a bubble. What does it mean when stock gets expensive? It means the higher it goes up to 25, 35, 55 times PE, the more likelihood that you're going to get a flat or negative return in the future. And so they're not, in my opinion, in a bubble, but I would say that they're not a great investment at this point. Another question about Open the Fund. Do you think the performance is going to be better among trade war situations now? It's a good question. I mean, remember that fund is ex-China. So if the trade war is serious, it's going to be a trade war between China and the U.S. And so that instrument, that fund that's China, Asia ex-Japan, ex-China, could potentially outperform relative to just an Asia ex-Japan. So I do see some performance there. All right. We just got a little bit more time. I'm going to go back into the presentation and talk about a few other things, but keep your questions coming and I'll come back. So America first means likely more tariffs on Chinese goods. Trump will start by hitting China hard with tariffs to get the Chinese to play ball. In a good scenario, this leads to reducing U.S.-China tensions. And in a bad scenario, it increases tensions. It's a high-stakes game, and the risk is a trade war. China may not give in as easily as the other two countries. With certainty, Trump's unconventional methods bring uncertainty. I think that Trump's decision to do a 10% tariff on China was because he is a little bit afraid. I would be more afraid of China retaliating or having some other challenge than Mexico and Canada. So financial markets don't like uncertainty, of course. So gold does well in times of uncertainty. Gold protects value in times of these uncertainties and market downturns. Gold is typically a safe haven in times of geopolitical tensions and financial turmoil. It's been high and rising for debt, and therefore it's driving to some extent the gold price. We can see here that I've rebased the U.S. public debt and the gold price. So high debt often leads to concerns about inflation, as government actions to tackle the debt burden often increase inflation. And China's indebtedness has surpassed the U.S. That's interesting that there's so much debt in China. And here we can see central banks have loaded up on gold, maybe switching from U.S. dollar. Of course, this may have come to an end now that it appears that we're going to be out of a war with Ukraine pretty quickly. So gold has strong momentum and hit new all-time highs in U.S. dollar terms. We can see here. Based on the previously mentioned reasons, gold has gained momentum. But we think it can continue, and also we're going to keep gold as insurance. So we keep a high exposure to gold in all three strategies right now. Now, it's important to remember that may all change when we rebalance in the beginning of March. So AI is here for good. Both the U.S. and China are serious about winning the AI race. Energy demand should grow massively, and Trump is playing with high stakes. Trade war with China is a big risk, and continued uncertainty should support gold. We keep high exposure to gold in all three strategies. Before we get into any further Q&A, the Valuation Masterclass Bootcamp 20 starts on the 3rd of March, 2025. We help finance professionals become valuation experts in months rather than years. And we have many prior students coming from FINNOMENA, such as Chachada or Tossaporn, or Takon, Kelly, or Jutamas, who's a customer there, and Bunsim also, and Pongsakorn. So in the Valuation Masterclass Bootcamp, you get a 6-week guided intensive online valuation bootcamp, daily live sessions, team support, progress tracking, and to write and present a professional valuation report is the end result. So get an extra $100 off any price point. Just use the code FINNOMENA at valuationmasterclass.com/bootcamp, or just scan that QR code. All right, let's now move into the final stages of questions. Any final questions before we wrap up? Let's see. All right. What makes some countries like Malaysia stronger than Thailand? I wouldn't say that Malaysia is stronger than Thailand. Malaysia is facing a lot more challenges and, similar type of challenges. Malaysia's been a low volatility market for decades. And so when things go bad, Thailand tends to go down more than Malaysia. But as far as the inherent structure of the economy, I wouldn't say myself that Malaysia is in any better of a position than Thailand. Jira Utah, do you consider to add ETF to the portfolio instead of active fund? For instance, KUSXNDQ over B Inotech to lower the fee. Actually, we haven't, and I'm gonna mention that to the team. I don't think that we can do that at Phenomena because I'm not sure, are the ETFs traded there? I don't think so, but there are some other things that we've been looking at, but that's a good question. Yeah, use the Phenomena code to get the discount if you want to attend the Valuation Masterclass Bootcamp with me. When you choose to invest gold or gold mine, opportunity and risk is the same? No, it's different. Gold miners are companies. So technically they're equities. They just happen to have some, possibility of correlation with gold. But let's say that gold is rising and oil prices are rising. If oil prices are rising, it means that the cost of extracting oil from the ground is rising, and therefore the profits of gold miners is falling. So we want to look at gold miners as equity, as something very volatile, and try to understand, the difference when we're investing. All right. Yes. Love. And yes, Kay, you're very welcome for the explanation, and I'm happy to explain anything. All right. Well, I think we've gone through all the questions that you guys have shared. January was a pretty good month for us. Let's hope that February does well also. Of course, there's certainly a risk that we could end up with U.S. market eventually falling this year. But also remember, that's why we've diversified not only in stocks, but we're also in bonds and commodities and gold. And so we're willing to consider all of those. Another question from Jet about Valuation Masterclass. Is it for professional investor or financial advisor? I would say that anybody can attend. It's for someone who really wants to understand how do we value a company. So we've had a lot of advisors. We've had professional investors. The main thing is it's an intense course that I teach everything I know about how to value a company in the stock market. And yeah, so that's what I would say. Yes, Rapunzel, it's my pleasure. Remember the saying, when I was a kid, we used to tell the story, Rapunzel, Rapunzel, let down your long hair. So, yes. All right. That's it for today. I want to thank everybody, and hopefully you have a wonderful Valentine's Day coming up on Friday. I'm still single, so I don't really celebrate Valentine's Day, but when I grow up and I have a girlfriend or a wife, I'm going to celebrate Valentine's Day. So instead of celebrating with a girlfriend or a wife, I'm going to celebrate Valentine's Day with my mom. Last week was my father's birthday. He passed away about 9 years ago, but I made a really beautiful picture, a collage of my pictures of my father that I gave to my mother. So we celebrated his birthday, but we'll also celebrate the Valentine's and the love between them. They were married for 59 years. So incredible. All right. Thank you, everybody. And I will see you soon in a month. And remember to check out your advisors at Phenomena. They've got answers to your questions. Always remember that I'm not your personal advisor because I don't know your situation. I provide these strategies to Phenomena. They provide them to you. You should be thinking about them, talking about them with your advisors, and then making your own decisions. It's great to meet all of you guys today. Let's have an amazing February, and I'll see you in March.